So for more on the markets and what is moving them this morning, we're joined by Jason Ware, Chief Investment Officer at Albion Financial Group. Jason, it's good to see you this morning. So the biggest item here on the docket is these two runoffs in Georgia. The Senate elections taking place today. What effect do you anticipate they'll have on the markets?
Good morning. And, I think Wall Street needs to get its story straight. It was just 2 months ago that a blue wave was supposedly going to be a big market positive because we were going to get more stimulus. We were going to have, infrastructure spending. We were going to have a national strategy on the pandemic, perhaps no trade war. The list was long as to why 53 or 54 Senate seats potentially for the Democrats, a House that's in control, and Biden as president was going to be good for stocks. And now suddenly the potential for a 50-50 Senate has investors nervous. So, our view is that this is something that the market will work through, that it's not a major negative if Georgia goes the way of the Democrats, if Ossoff and Warnock do win today. I think the reality is that a 50-50 Senate with the vice president as the tying vote probably tamps down the thing that the market was most concerned about a couple of months ago with the blue wave, which is tax increases. So you probably get a little bit easier path to another round of stimulus with a 50-50 Senate in a couple of months if we need it, but big tax hikes are probably off the table. So I think it's a story that investors are watching. I think it's a reason to sell stocks maybe, but we don't think it's a fundamental change to our market view this year, no matter what happens.
So let's talk about what is happening in the markets right now then, Jason. It is a seasonally strong time. Today is the official end to the so-called Santa Claus rally. 7 total trading days, the final 5 of the previous year, the first 2 of the new year. But with yesterday's losses, it's going to be tough to eke out a gain here over this period. Is it the coronavirus? What is dragging these markets lower and not giving the momentum that we saw in November?
Sure, it's a great question. And I think part of it is the momentum that you mentioned. I mean, we had a really strong November. So I think, getting at record highs with with virus cases still rising, with lockdowns in the UK happening, with Europe still in trouble with regards to the pandemic. These are all reasons, I think, to make adjustments to the portfolio in the new year. And I think that's what we're seeing. Again, we need to take this in context. We were at record highs on December 31st. And I think most people, if you had told them in the first part of 2020 that we were going to have a global pandemic that was going to shut down the economy and grind it to a halt, having a 44% year in the NASDAQ and a 16% year in the S&P 500 would have seemed absolutely crazy. So again, the context that we were at record highs before yesterday's sell-off is important. I think it's a little bit of portfolio adjustment. Maybe those that didn't want to sell for tax reasons at the end of last year did some selling yesterday. So we'll see where it goes from here. I think the good news is that when you look at, there's only a few observations going back to World War II on this data point, but I think it's one that might be encouraging for your viewers. If you look at strong year-end gains like we saw at the end of 2020, typically that foretells a pretty decent year in the markets the following year. Not only do you usually get a rising January, but you get a fairly decent year in stocks in the following year. So I think we're still optimistic on where stocks can go for 2021.
And I'm glad you broke down what may have been happening on the first of the month, the first official trading day of the month yesterday, because we had heard from many guests leading into the end of the year that we could see some selling in January. There might be some air pockets or even a correction on the horizon. And if people were waiting for tax reasons to basically book some of those profits here in the new year, that'd be one reason, right, that we would see some selling throughout the rest of January. Do you follow that same notion that we're going to see a bit of a correction, some profit taking in this market? COVID might finally start to wreak havoc again on this market, or do you anticipate that maybe we already saw the worst for January?
Yeah, it's hard to say. I think trying to predict what's going to happen with the market over very short periods of time, like a few days or a few weeks, is very difficult. But again, I think the momentum in the stock market is to the upside. So while we did have a rough start to the year yesterday, and it looks like markets might be a bit mixed or choppy again today. Again, I think the good news is that when you have that strong momentum in the year end, that typically suggests that the path of least resistance is higher. I think we still have interest rates that are a tailwind. We still have the Fed that's a tailwind. We clearly have pandemic-ending vaccines on the horizon. Yes, the rollout has been tricky and it's been slower than anticipated, but we still believe that the course we're on suggests that we will get back to a return to normal this year sometime by mid-year. And I think there's a lot of excess liquidity, a very high savings rate that's pent up in the economy. And I think as folks come out and return to life as normal, that spending is going to hit the economy and we're going to see a fairly decent boom this year. So I think all of those things together suggest that while it doesn't directly answer your January question, I think that as you look at a little bit longer time horizon for investors, let's just call it this year, we continue to think the stocks can move higher over the medium term.
Let's stick to another potential market moving event this week. That's tomorrow. And before tomorrow, we already saw yesterday 200 prominent business leaders from Deloitte, Goldman Sachs, Pfizer, BlackRock, penning a letter, an open letter, a memo saying that they support a smooth transition of power ahead of this basically procedural act that's supposed to happen in Congress tomorrow, where both the House and the Senate certify the election results for the president-elect Joe Biden. Now, with about a dozen of these GOP senators said to object to that without a 10-day audit, is that something that could be a destabilizing factor in this market, or do you think that this is something that will just basically move through?
We'll definitely just move through it. It's not going to be destabilizing. I think it's a lot of sound and fury with little behind it. Definitely just political posturing by a group of individuals that can't seem to accept the results of the American people. So, and I think one good I think thing to focus on is that we're only a day away from it. So if this were 2 weeks down the road or a month down the road, perhaps it's something investors would focus on a little bit more and just see how things develop. And I think the path to actually changing the results of a free and fair election are very low. That's the good news. And we're only a day away from getting past that. So I don't think that's something that investors are going to focus on too much. I think it's something that we can all just kind of brush off our shoulders and move on with.
This split between Main Street and Wall Street, Jason, still very much on display. We're still near record highs. The stock market is rising today on the second official trading day of the new year. Yet the jobs numbers are cooling. The recovery is slowing. We see it in consumer spending, retail sales, and the job additions that we see on a monthly basis. We're going to get that jobs report for December on Friday. This disconnect, do you anticipate that it's still going to be a story into this new year, that unfortunately the economy is slowing in this current circumstance, yet the stock market shrugs it off?
Yeah, it's a great question. And that's really just the way that's the normal relationship between stocks and the economy. And I know it doesn't feel correct. It seems counterintuitive. But the truth is, a slowing economy has been something that the stock market for better part of the last 12 years has worked through without much of a problem. We saw that post-Great Financial Crisis, when we'd be growing at 2.5%, maybe getting to 3% in a quarter, and then suddenly we'd have something that would reset us back to 1.5%, 2%. Investors would wring their hands over, the concern of a slowdown in the economy. And does that mean maybe a double-dip recession, or we may go into recession? But, all of the strongest leading indicators through those slowdowns show that the economy was still structurally and fundamentally sound, and stocks usually did fairly well despite those slowdowns. And indeed, it also had this countervailing policy effect where when we get an economic slowdown, that would also mean that the Fed might be a little bit more accommodative for longer. And I think that's kind of where we're sitting today. We've had this waning momentum off of what was a really strong bounce in the summer after the economy was shut down in the spring. And that V-shaped part of the recovery was never going to be sustained for longer than a few months. It was unrealistic to think that's going to last for 12 to 24 months. We do expect a fairly strong economy in 2021. But, if we get 4 to 5% growth, that's going to be one of the best growth numbers in a calendar year going back 30 years. So I think that's something that investors can celebrate, even if we do have a bit of a soft patch before the pandemic ending vaccines get us out and we see that boom happen. So I think it's something that investors can look through, especially given the vaccines are coming. And I think that provides a bit of comfort to the market, despite seeing the slowdown and the wane in the economy right now.
All right, Jason, we're Chief Investment Officer at Albion Financial Group. Jason, it's great to get your insight there. Thank you.